learning how to meditate by yourself in a room with other people who are silent, who aren't allowed to speak with you, in a building in the middle of a piece of land that is far away from other things, is much easier than, say, if you're in real life with a marriage and kids and a job and commitments and responsibilities. And I often find it interesting when there are gurus about meditating who are, single men. Most of them, I think of men. Most of them actually, most of the monks are people who meditate. I don't know why, but I think they're men. I know there's a lot of women who meditate, but I'm never that impressed when it's like a single person who's not married with, and they don't have any kids. Like, I want to see the guy who meditates, who's got 3 kids, runs his own business, is in a thriving marriage, and lives within the world, not outside of it. Now, the reason I bring this up is because I had to be on a plane twice this week, which, if you know me, I'm almost never on a plane, let alone an airport, let alone a busy highway. But it got me interacting with complete strangers about what I do. And what struck me most is the theme that I want to bring you, and what I hope you do is you're able to see yourself in it and get insight from what I want to share with you. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend's podcast is, I used to know. Now, what it should really probably say is, I used to know ... which is, what's missing is, I used to know what to do, or I always know what to do when the market is going up. Now, on the screen here, you got this one guy, Mike Tyson, and one of my favorite quotes from him, and I don't really know any of his quotes except this one, so I guess the only quote I know by Mike Tyson, and the one I love best, is he says, everybody knows what to do. No, he goes, everybody's got a plan until they get hit. And whether you like him or hate him, when I read that quote so many years ago, I thought about people and how they invest in the stock market. Everybody knows what to do when the market is going up every day or every month or every quarter or every year. Of course you know what to do. But the problem is, every major asset class on the planet, stocks, bonds, commodities, currencies, they all get hit with 50% corrections from time to time. And so people don't know what to do. They panic. Just like Mike Tyson's opponents. They know what to do until they get hit by him, and then they don't know what to do. So I'm recording this on Friday. I record all my weekend podcasts on Friday. I typically wait until after the market closes, but not always. And today was a pretty bad day if you want the market to go higher. It was a particularly great day if you want it to go lower. But what I want to do is step back and kind of point out a couple things that I noticed. And most important is, what is your plan? What is your system? What is your approach? Do you have one? Now, you probably do, but is it been proven? Have you tested it? Is it written down? Do you consciously know what your plan is? And maybe you do. And history says that people who have a written plan, a written method, they do much better in life and in the stock market. So I really only have, now this is a picture right here on the screen, but I really only have one kind of piece of data, and it's not a price chart, which I know how much I love price charts, but I just took a snapshot today of this on my computer. I zoomed it up so it really looks bitmapped. But kind of in the middle is the S&P, which fell 3.18% today, which is pretty darn impressive that it fell over 3% in one day. But what I noticed most, and what I'm always interested in more than anything else, is how other things do. And so what I noticed most is the larger companies fell the hardest. I mean, you have the NASDAQ 100, okay, which is the largest company, 100 companies on the NASDAQ, and they fell 4.28% in one day. And then you have the 100 largest companies in the S&P 500, and they fell 3.4%. meaning the largest 100 companies in the NASDAQ and the S&P fell harder than the S&P 500. So this is really interesting. Now look, one day does not make a trend. Now the Dow Jones, which today actually fell slightly less than the S&P, or today is Saturday for you, but on Friday. But over the last year, the Dow Jones, which is 30 large stocks, has been underperforming the S&P 500. So the biggest thing I took away from Friday's fall is the large companies, the ones that are supposed to be super safe, they're the ones that fell the hardest. Now, look, we can all come up with reasons why. Maybe those people who are in the most conservative stocks got spooked the most and they took some money out. Maybe they are the older investors in their 60s or 70s and they got spooked, so they took more out. But this is what's interesting. Look at this bottom number here, the Russell 2000. Those are the small cap stocks, right? It fell half as bad as the S&P, even less than half as bad. I mean, half as bad would have been 1.6%, but it only fell 1.34%. So literally the smallest companies did, relatively speaking, so much better on Friday than the largest companies. That's so interesting to me. And then you have the Toronto Stock Exchange that fell not nearly as hard as the S&P or the S&P 100 or the NASDAQ 100. Now, typically the companies on the Toronto Stock Exchange are mining companies, very, very dangerous companies that take a lot of capital to make their companies work. And that did not fall as hard. Now, one day does not make a trend. It's only one day. But on a day that has such severe movements, it's always interesting to see how people are thinking. And based on just this one teeny piece of data, basically what I would say is the people who have the most conservative investors, typically those are the ones that are in the largest companies, got the most scared today. And the ones who are in the most dangerous stocks, the small cap stocks and the Toronto Stock Exchange type stocks, they did not get scared as much. Now, is this a changing of direction for mining and mineral stocks? We'll see. They've been in a horrible downtrend for 4 years. Does this mean, get into small cap? No, you're going to want to have a system, a method that you can look to. So when there's a bad day or a bad week or a bad month or a bad quarter, you have a proven system that's been tested. Because if you keep it to yourself and try to do it on your own, you will greatly underperform the unmanaged index of the S&P 500. And there's just no need to ever do that. But it's just so interesting on days like this to see really what people are thinking. And this is real money on the line here. This is not opinions. These are not economists. These are real investors that are putting their money in, taking their money out based on what they believe, is best for them. Though, again, investing is hugely emotional, and especially so if you have no methodology, system that you can rely on. So, tough week and a tough ending to a tough week. Now, here's my opinion. I actually think, this is an opinion, this is not a forecast, but I don't think I think we do have a little bit more uptrend in front of us. And before we get there, we probably have a 10, 15, maybe even 20% correction in front of us. As it is right now, the S&P closed below that magical 2,000 mark. And not just below, but it closed down 29 points below that, closed at 1971. So next week's going to be really interesting. And for me, it's just very interesting. And this is super interesting to see what's going to happen. As far as the takeaway comes via Tim Ferriss, who I'm a bit of a fanboy of his. And he's got this great saying, and it is, you have to build systems to protect against your lesser self, right? The people who accomplish most in life are not the happiest, are not the smartest, but I'm pretty sure they're the ones that either manage their dark side the best, their depression, their sadness, their failures. They manage that the best and they get right back in there, or they get back in there much sooner. Or it's those that actually build systems to protect themselves against their lesser selves. They've learned that they maybe can't count on themselves to kind of wing it or just get it done. And so they build metrics and systems to make sure that they get what they want to get done, which can include not logging on to the internet, not checking your email if you actually have to get something done. I mean, there's all these things you can do to actually increase your efficiency. And one of the best ways, best hacks to increase your efficiency in life is to not check your email except for maybe 1 hour a day. And other than that, be completely logged out of your email. In the world of investing, one of the best things you could ever do is have a system that tells you what to do and put 80 or 90% in that system. Now, for me, that's market probability. And then keep the other 10% and dabble and go get Steve Sugarwood's newsletter or Porter Stansberry's newsletter, or log on to fool.com and get their newsletter, or get a dozen newsletters, and go ahead and dabble with the other 10% of your money because it's fun and it may be a passion of yours. But put the other 80 or 90% in a proven method that will grow your money over time based on math, based on history, based on statistics. So the takeaway, again, build a system or acquire a system that protects you or protects your money against you. Hey guys, this is just another step in helping you secure your future and secure your portfolio. Until next time, this is RC Peck. Hey guys, thanks for being with me. I appreciate you listening to my podcast, and I love delivering them. I love sitting down, looking at the price charts, and really pulling out the one thing that stands out to me the most each week. And every time I do it, I always come back to it's the method that matters most. It's not your intelligence. It's not how much you earn. It's not how tall you are. It's not what school you graduated or didn't graduate from. It's the method that is used to grow your money. And for me, that method is the market probability approach, the market probability strategy, the market probability system that has an amazing track record of keeping people on the right side of the stock market. If you're interested, I will be coming out with a new, I just love it. I put a lot of time into this webinar that you'll probably be seeing next week, or I would say in the next 5 or 10 days. So check it out. I love it. I keep working on bringing my approach to you with more and more straightforwardness and more clarity. You guys take care.